I don't think a lot of viewers will know, but Black Desert rakes in 20, 30, $40 million a year just through in-game revenue by selling items like, a special sword that you can kill your enemy with.
And the other thing, when I delved deeper into the Vedantu, this Wave platform, right? This attention tracking through AI, that's also interesting.
So last week they have raised pre-series A round of 1.2 million, that is approx 10.5 crores.
Everyone, welcome to another episode of Weekly Digest with Fibonacci X. We bring you interesting deals from venture ecosystem, and we try to dissect some of them by adding flavor of sector, business models, etc., etc. So today we have two of my colleagues. I have Riksha, who is part of our investment team, and we have Samir, who is venture partner with us. And we'll be discussing some of the deals. To start with, we'll discuss Arihan. So I found the name interesting because Ari is knowledge in Tamil, and Vihan is like, taking flight. So as the name suggests, it's knowledge taking flight, basically an Edtech, right? So the name is quite apt in that sense. And it's early stage right now. And this is one of the plays which I imagined would happen with AI, especially for a country like India, because instructor-led teaching, etc., may not work for tier two, tier three towns, right? So technology is a great equalizer, in my opinion, in all fields because it gives access at a very low cost. If you look at any sector where technology enters, the prices just drop, the cost just drops to the rock bottom, and access becomes easier. You can look historically, last 50 years, whichever sector technology has touched, the cost has just dropped, dramatically, right? Any sector, you can look at any sector. So with this new multiply technology, which is AI, which has existed for some time now, we will see the same impact in a lot of sectors like education, healthcare in India. Especially for India, I think the visibility of impact will be more prominent because a lot of our country, because we are a huge country in terms of population, in terms of geographical area, we have great disparity in terms of access. So if you compare K-12 students in, let's say, schools in Delhi, the pin code where I stay, there are about 13 K-12 schools within 3 kilometers. And so I have DPS Puram, I have Ryan International, I have Goenka Bhatnagar Heritage, right? Top schools of Delhi. And if I compare the access of education to 100 kilometers outside Delhi, there is a great difference in the quality of education. And that's the reason kids from tier one schools do well in NEET, they do well in other exams, engineering exams. And that's why people want to stay in cities like Delhi and Mumbai because you have access to quality education. Even the Kendriya Vidyalaya in Delhi will have better education versus Kendriya Vidyalaya in, let's say, some district in Bihar or UP or some other area. Now, Aribian, I think it's trying to address that. Uh, I'll come to the business model. They've raised around $4 billion dollars in pre-series A from Process, Excel, and GSF, which is also an accelerator. They also run an investment side to the business, right? And this was part of Excel's Atoms program, which is where they spot early stage companies and fund them at pre-seed idea stage. If we look at, if we just zoom out, if I was just thinking about other players who are doing in K-12, which are active or who are active in K-12 or let's say exams which students are taking post K-12. So if you look at Physics Wala and Vedantu, because Byju's is not relevant anymore, it used to be relevant, it's not relevant. So Physics Wala is betting on, it's a profitable venture. They are betting on offline plus online kind of a model. And online is roughly, I think, 55% of the revenue, if I'm not wrong, last I checked, as per FY25. And Vedantu is B2C, but they are doing something interesting, which is whiteboard audio video environment, which is called Wave, right? So even though you are joining online, the system, the technology platform they have built acts as if you were sitting in the live class. So the way you are interacting with the content, it recognizes the patterns. So you will have, during the session, you will have pop-up quizzes. They will track who is paying attention, who is not paying attention. So it's based on AI/ML also, right? And we know Vedantu has been profitable for quite some time now, right? And both of them, Vedantu and Physics Wala, they are doing K-12 plus comparative exams. So while Physics Wala is around trusted educators, let's say Alak Pandey himself is well known, right, for teaching his style and the way he connects with students. While live interaction is basically personalized attention as per my learning style, even though I'm joining online, this platform recognizes, okay, which content I'm interacting with, which question, when am I switching windows, even if I'm joining online. So it tracks all that, right? So this is also kind of a virtual, but you are there, right? You are being tracked. But now comes Arihan, which I think early, but it is something which other players will also adapt to. There is no teacher, there is no live class, there is just a platform, fully automated AI tutoring. You can ask questions, and as per their claims, a large number of students, which is they claim around, I'm just looking at the number, around 50% of the students who came on platform saw a jump in their scores, right? They currently have 15,000 subscribers, and because they're targeting tier 2, tier 3, it's only 300 rupees per month. Okay. So it is AI only. There is no tutor, there's no live class. You go on the platform, you ask questions, you learn. There is some content, so the platform interacts with you. Also, the way they are targeting states like UP, Bihar, so they are also developing this platform to be able to answer question in vernacular languages or regional languages. Could be Tamil, could be Hindi, could be Bhojpuri, whatever language you speak, right? That's the beauty. So the student who is sitting, who is at great disadvantage if he is joining, let's say, some of the bigger platform, because the instruction, etc., is in English, right? If you have been to Akash offline centers, most of the instruction happens in English. So if you're coming from a state board, you are at a huge disadvantage. So Arihan is addressing that, and they are even targeting state board students because they can tap into different languages. So this is fully automated AI approach and hyper focus on affordability. 300 rupees per month is not that, right? In tier 1 cities, one-to-one tutoring is happening at 1,000 to 1,000 rupees per hour when people come and teach you at your house. Even in smaller towns, they are charging 1,500 per week. So 300 rupees per month is nothing, right? So clear distinction, Vedantu versus Physics Wala versus Arihan. Other players are going to adapt to this. They have the balance sheet, they are profitable. So Arihan for me is also a prime candidate for M&A in future. This could be acquired, or even the tech stack could be acquired. I'm sure they have developed, some of the tech in-house, right? But this is a huge market, right? K-12. I mean, at some point, I would like to touch this market from the entrepreneurship point of view, under venture edu also. So I spend a lot of time. Let's say TAI is doing a lot of young entrepreneurs programs with schools, right? Tier 1 cities, they go to schools, 10th grade, 12th grade students, they ask them to pitch, they ask them to work on new ideas. So at some point, as an organization, I think we also need to touch in this segment, basically K-12 students who already have great ideas from entrepreneurship angle. So when I was reading Arihan, I was also thinking, okay, what can we do from entrepreneurship angle to interact? It's not that these guys don't have good ideas, right? It's just that they may not have the business acumen which traditionally is required for funding, right? So they can be mentored, they can be nurtured while they go for their education. So those ideas can become successful, right? So it's an interesting space. I think all of us should follow this. What happens to this company? And fully automated AI tutoring is here at scale. We should accept it. This is the way our kids are going to learn in future, right? But although there is still value in one-to-one tutoring, but these will become very good systems in areas where this one-to-one tutoring offline centers are not available, right? So its cost is going to, like, it's already 300 rupees per month. So I think it's a great equalizer. You will see a lot of people cracking competitive exams coming from districts where likes of Vedantu, Physics Wala, Akash has not reached. They will be cracking exams like NEET, IITs, and other exams, right? So it's a great equalizer. Technology is always a great equalizer. So I'm happy for this. And from entrepreneurship angle, I think we just need to figure out as a team what we can do, similar to Arihan, how we can reach out to those people who are not here and don't speak the language which we speak. Maybe they speak different language, right? So yeah, so there was my take.
I don't have much this thing. I agree with you on this completely. I don't have a differing opinion over here. So yeah, it's bound to grow, and it's interesting to see how it will shape up in the coming days and coming years and months. Yeah, nothing unique perspective from my end, to be honest.
Yeah, and the other thing, when I delved deeper into the Vedantu, this Wave platform, right? This attention tracking through AI, that's also interesting because earlier you could game that system if you were joining online coaching, but now this AI-based engagement monitoring that will also nudge you, right? When you are side tracking, when your attention is you're clicking on a different window, browsing Instagram, Facebook, then it will nudge you. You know, you are actually not supposed to do that, what you're doing. So it's good. I mean, again, productivity, all that thing that improves, right? And that's, anyways. So that's already pretty good. It's just that Arivian in completely different league because there is no human, right? There is only the platform and the student.
I think it's very much based on reinforced learning, right? They're using AI as well as psychology to come to a point where they're able to reinforce the individual or the child to learn in that way, which is not very possible as a human being, I would say, because that you can't give if I'm a teacher teaching, let's say people of 20 people, I can't focus on each one of them, right? Or see the eye movement or the focus. So very interesting to see that coming up. Okay, I can go ahead next. So the next company we're going to talk about is the sleep company. It's scaling retail in the D2C sleep market, basically selling mattresses out there. Now, interestingly, before I move deep dive into it, we need to understand what is the mattresses industry, how it looks, and what it is in India, right? So there are generally 7 to 8 kind of mattresses being sold, out of which there are 4 main kinds, right? So there is something called a memory foam mattress, something made called Choir, which is made up of coconut husk. The third one is, I think, spring mattresses. Then you have latex mattresses, which is made up of rubber. It could be natural rubber or it could be synthesized latex. Then you have something called grid mattresses, which is basically polyester made grid, which improve the circulation of the mattresses and make it cool. And then there are offshoots like water beds, spring, and memory foam hybrid, and the various kinds, right? Now, India being a very, on an average, hot and humid country, if you remove the northern parts, but still, on an average, it's much more hotter and humid than most of the countries out there. So, 3 things come into play. The first one is obvious that the mattresses need to have a bit of firmness so that your body has a structure to it when it sleeps. Secondly, it should also be, how do I say, Having a memory kind of mattresses helps because it adjusts to your body type, right? And the third and the most important factor in India, at least, would be how hot your bed becomes when you sleep. That is where something like a mattresses that have uh, inbuilt quality to regulate the air in the mattresses to keep your body cool helps a lot, because there are various studies out there which show that between optimal temperatures of 21 to 25 degrees, depending on where you stay, your body should be cooled down when it's sleeping. It gives you the best sleep and the best helps build your repair your body. So having a hot mattresses a mattress is very no, it's not optimal for your body. Now coming to what the sleep company is doing, the sleep company makes it has a patented smart grid mattress, which means that not only does it have a grid like structure for its polyester build, which helps to keep the mattress cool while you're sleeping, it has a smartness to it in the sense that just like a memory foam, which can adapt to your body structure, this grid-like mattress also adapts, so it keeps it firm as well as gives your body optimal shape, so that you don't feel or wake up with body pain or neck pain or whatever like ailments that you have. And this is being reflected in their rise in revenue. So in FY23, they had a revenue of almost 127 crore or around 130 crores. In FY24, they had a revenue of 312 crore, almost 2.5x rise, right? Which is a big rise in one single year. Now, in the latest funding round, which occurred in August 2025, they raised almost $56 million, which was around 480 crores. 50% was primary, 50% was secondary. The investors were Chris Capital and 361 Asset, and notably the Fireside Ventures, which were investors in the previous rounds. They had a partial exit in this secondary sale, which was almost 50% of the value, right? Which is a huge amount of money. Now, the funds that they're raising are going to be used for team expansion and mostly for rapid offline retail growth. Now, you might think, why are they like going for so much expansion, especially given that they are net loss of, I think, almost 15% in the FY24. But when you look at the market in a broader sense, so when you compare sleep company with, let's say, the bigger players, players such as Wakefit, which had 820 crores of revenue in FY24, it captures almost 35 to 40% of the online sales purely in India, right? Then you have Duroflex, which is a legacy company and has almost 1,000 crores of revenue, but they are net profitable. Sheila Foam, almost 2,200 crores of revenue. They have a flagship brand called Sleepwell, which is very well known, I guess, in the Indian market. They're also net profitable. And then you come to Sleep Company, which has 300 crores of revenue. For, I think, if I'm correct, I was looking at the numbers, and let me come back to the number. For every rupee that they spend, right? I mean, sorry, for every rupee that they have a revenue, they're spending 1.21 rupees. Out of which almost to almost 70% or 65% is the cost of goods sold. Around 10% would be the cost of the employee cost, and almost 25% is going to marketing cost. So for them, what they understand is that when they scale up to a sufficient level, they plan to become net profitable. So for them, profitability is not the main criteria. It's about generating higher revenue and reaching the market out there, because there has been a kind of proof in the market that mattress makers with high amount of revenue, they tend to become profitable. And with Sleep Company also, even though the whole of FY24 was not profitable, the last quarter was profitable for them. So they're trying to reach people via offline measures and have an omni-channel in the coming months and years. And they believe that as they reach scale in this industry, and as the proof is there for the bigger companies, they tend to they want to become profitable over the months and years. Again, nothing unique here. It's just that they have an IP patented mattress, which is very good, and people prefer it. If you look at their YouTube videos also, I was going through some of their ads, 27, above 20 million views on their ads. And people are also praising their mattresses. So it's a good product. The industry is something which is verifiable, that if you scale up to a good amount, you become profitable, net profitable. And for example, Wakefit is coming up with an IPO in the coming months, right? So eventually, I can see the sleep company reaching a good revenue of 600 to 700 crores in the next 2 to 3 years, and then hopefully IPO in the next 3 to 4 years. I think that's what the logical plan seems to be right now.
Yeah, makes sense. This is a timeless business. We will always need sleep.
Yes.
This will continue to stay relevant. But what do you think are versus competition? Uh, what do you think the pressures are, the challenges are for them?
What I've seen, the challenges will be now when you reach a scale, right? I mean, look at Sheila Foam. That is a parent company under which you have the Sleepwell brand. So, having, let's say, the reason that they're working so well is because of their patented grid technology, smart grid technology that sleep company has. Let's say Duroflex or Sheila Foam come up with something new patent technology in the future, which makes it better. So there will be a shift from consumers going from this to that until they don't reach a stage of high penetration in the Indian market. They are at the risk of having lower revenue and always spending money. What I've seen with established companies like Bigfit, which is again targeting mostly online, they don't do that much. I don't think they have an offline this thing. They do mostly online. They have a set model and they have captured the online market very well. If you're not in the top 2 to 3 companies, let's say capturing around 20 or 30% of the market, generally, you lose the risk of relevancy in this industry. Because people, I don't think I'm very here. People, when I read through comments, when I read through the Reddit posts, when I read through the YouTube videos, people tend to stay very loyal to their mattresses until something really bad happens. But if there is a good technology, a better upgrade, like this happened with the sleep company, and that comes in the market, people are not hesitant to pay a few extra bucks and convert to that technology. Given and for example, let's say Duroflex, if I'm correct, they have a 100-day return policy. You can try out the mattress. If you don't like it, you can return it. That increases the customers coming to you. I feel that the sleep company also needs to build. I mean, not only they're trying well with having a good market share, capture good market share, they should adopt policies where people can try it out, because people tend to be very uh, sticky with the mattresses. If it's a good mattresses, they want to keep buy something similar to that, something from the same company, because it's tried and tested. This is where Duroflex comes in and breaks it. Hey, try our mattresses for 100 days. You don't like it, you get a full refund. So they are very sure about their mattresses being good. And since the sleep company has such a good mattress out there, they should come with some policy where people should try it out. I mean, obviously, there will be some expenses based on this, but this will be a very strong and solid way to like capture the market and convert people to their own brand, which I think they need to do, because they are again 1/3 of or 1/5 or 1/4 revenue of the big companies out there right now, and still not yet profitable. So their main aim is to become like to capture market. They should be coming out with incentives that make people convert to them. For example, which what Duroflex is doing. That's what I feel is the next challenge to solve, like conversion and having marketing mechanisms out there to convert people to their mattresses because of the superior product.
Mhm. But I think this offline presence of distributorships, centers where people can go and see, touch, and also because it's sales which cannot be closed online only. I think people still want to go to the center, right?
True.
This
That is what
offline
they're doing
presence.
right now. They are spending
Hmm.
majority of the money to open almost 150 stores out there. So
Hmm.
even though Wakefit, let's say, says, I mean, the reports say that Wakefit has almost 35 or 40% of online market share, that 35-40% corresponds to just maybe 5% of the whole overall market, right? So the majority of the mattresses are still being sold offline because people want to trust the brand, feel it, see how it feels. And that is where the sleep company is going out there. What I think, yeah, I mean, that's what they're doing basically. You need to be able to feel the mattresses to know, Is it worth investing?
Yeah. Any idea what the margins are on these mattresses generally?
I don't know about I was looking at sleep companies' margin right now. So what I understood that if on the revenue of 312 crores, if this almost 240 to 50 crores, that means and if you have employee benefit of 35, 270, 280 crores, let's say. So I think without taking out the marketing and other cost out there, uh, at least on Sleepwell, they should be operationally profitable without marketing cost around 20%. But I don't know the answer to actual per mattress sale profit. Like I was looking at a lot of videos out there. Depending on the material that you use, for example, foam, right? It's cheap memory foam, and it's very there are companies they're selling out at 100 to 200% margin, very high. For example, if the making cost is 3 to 4,000 rupees, they're selling for 8,000 rupees or 9,000, 10,000 rupees. But that varies heavily from the material input. Latex is again expensive, especially if it's a natural latex. Something like grid, polyester grid is cheaper to make compared to latex. Then you have coir, which is coconut husk, cheaper to make. So it depends heavily on what kind of matrices you're selling from your company and the input that is going into it. So can't say exactly right now. Maybe I have to look into it and check out what the exact number is. Yep, it seems like typical gross margins around 40 to 55%, especially for foam mattresses.
Okay.
But that varies again based on what kind of matrices you're selling. Why it's different.
But the branded ones would be able to charge premium also. So
Yes, they reach 80, 100% almost.
Let's move to the next one.
So the startup which I'm going to talk about is Eon Space Labs. It is in the space tech segment. It was founded by Puneet Padeka, Sanjay Kumar, and Manoj Kumar in 2022, and all three of them had previous expertise in working with optical system design. Uh, they were in their earlier days, they were also incubated in IIT Madras and T Hub, and they also got that IDEX grant when they were working on their prototype. So earlier their names were something else, but now I think they have upgraded their offerings. I've analyzed them about 1.5 years back while they were closing their first round. So it's good to see the progress they have made since then. So last week they have raised a pre-series A round of 1.2 million, that is approx 10.5 crores, and it came from MGF Kavach, that is a growth fund, and HHV Advanced Technologies. And both of them are in optics manufacturing, so I think they are coming in as strategic partners. What Eon Space does is they specialize in building miniaturized, high resolution, lightweight optical payload. I think it was around 900 grams. So that for that time, I think one of the lightest optical payloads which is being made in India, and their flagship products were Mira and Lumira, which are ultra light space telescope carved from a single block of fused silica. Because it's monolithic, it stays aligned and stable even in extreme temperature changes in space. So they are also aiming to launch it by 2025 in collaboration with ISRO and there's another startup called Take Me to Space. For Lumira, it's already military certified and it is designed for drones, vehicles, and fixed installations. For their funding, with HHV Advanced Technologies on board, they can scale their manufacturing without relying too much on the imports. And if I look at the competition with other players, in more Indian players, that is Pixel, which is in hyperspectral imaging, Galax Eye that is working on multi-sensor fusion, Tonbo Emerging, and Idea Force that is in defense, CO, and IR. For globally, the comparison is with Atlantis and Dragonfly, but for them, their niche is more on the ultra lightweight optics, which gives them, which is their major differentiation, is that their lightweight structure. So I also looked at the Indian space policy and how does that support Eon Space Labs or startups like these who are building something in space tech, and how has it evolved over time. So uh, the Indian Space Policy 2023 opened the sector to more private players with single window approvals in space, that is a 500 crore tech adoption fund and a 1,000 crore venture fund for space startups. Also, the FDI limits have been liberalized up to 100% in components and 74% and in satellite manufacturing, which makes global tie-ups easier for them. So for a startup like Eon Space Labs, it means that it eases their tie-ups with global organizations. For states like Gujarat, Karnataka, Andhra Pradesh, they are opening their own space parks and incentives, while the national PPP programs like the 12 satellite Earth observation and constellation are they're putting EO and IR payloads. So what this means for Eon Space Labs is that they will get faster clearances, faster access to funding, and uh, easier tie-ups with global players.
Okay, what is the core offering which they have? I'm just trying to
So their
understand
core offering,
what is the addressable for them. So it's imaging, right?
the
Mostly
core
imaging
of
technology.
optical payload, yes, which is
Imaging. Basically, you go to other planets and
yes,
bring back or give the images. And you
yes,
said,
hyperspectral imaging.
I think hyperspectral imaging also has Earth uses. Like if you look at all the space inventions, right, they somehow trickle down to the Earth uses. For example, vacuum was there. It was made firstly for onboarding NASA flights and all whatever was used. It trickled down. Nowadays, what I'm seeing is a lot of these new age space-based companies, they are actually using the application on Earth first. So if you look at spectral imaging, right? If I'm correct, I don't know if it's geothermal or spectral, they are being used to in Leo or lower Earth orbit to actually scan Earth surfaces and find the mineral deposits. So that is one way to foolproof check if it's working or not. And then they're sending it out to asteroids and planets. So the new age companies nowadays are actually being used for earthly uses first, and then being sent out to asteroids and planets. Because Earth itself is a planet, right? If it works on this, it'll work on other rocks out there.
and interesting to see this MGF Kavach fund. We have discussed this in the past episode. So this was one of the defense secretaries. He started this fund. So going from this side to another side, it's a 400 crore fund, right? Which is going to focus on technologies, I am assuming, which are relevant to the defense sector, etc. Okay, great. Looking forward. Looking forward to more deals by MGF Kavach to all the startups which are going to get government contracts. Okay, so next one we are covering Fibe. You may not know Fibe, but you may have heard of a player called Early Salary. So this is the new avatar of Early Salary. This is the new name. Reason being because they're doing a lot more now in the consumer credit space. So typically, even I think in their earlier avatar, they were mostly targeting people who are doing 20,000 to 50,000 per month kind of salary. They'll give them credit. Now they are doing credit cards, UPI payment. impact loans like education, healthcare. Again, the ticket size is very small. July also they raised, and before that also in June also, June 2024 also they raised. And it's a profitable company for last, I think now 3 years almost. Uh, and their revenue is around 400 CR. Net income is around 36, 37 CR. Differentiator, when I was looking for it, I could see that they have gone beyond the traditional cash or EMI loans. They are covering solar financing, they are covering education, healthcare, insurance, mutual fund, FDs. So they have a bigger umbrella now. So it makes sense not to call yourself early salary. Now it's like fine, right? So which is more of a meta term. Uh, and it's mostly app-based lending. So, and a lot of their focus again is on tier two, tier three towns. And if I look at, if I compare, I was also trying to compare them with, let's say, other players like Kish, Moneyview, Zest Money, as you know, has already shut down, I think, which was BNPL. BNPL, I think globally is a failed experiment. I don't think any company has been able to scale. I mean, I remember this one deal where Square had put in into this Australian BNPL $700 million. Square mean, Twitter and Square have the same founder, and he had put in what is called now Block, right? Square is now Block, probably the global fintech. So Zest Money, Moneyview, and Kish. So again, Zest Money is shut down because of large NPA delinquency, etc., etc. I was just comparing Kish and Moneyview. Moneyview is again for SMEs because it's mostly revenue-based financing. Looking at Kish is mostly for durable goods. Let's say you want to buy a AC or a washing machine, so you can do loan through Kish, right? Which is another fintech which is into consumer lending space, right? Um, and all of them have raised, 100 to 200 million, some even $300 million in funding, right? Because it's a balance sheet play, and usually people are able to build structure and be profitable because they are lending at probably 20, 25%, even higher than that, right? So that way it's profitable. I was just thinking what are the reasons why Fibe will stand out. One is that their NPA, net NPA is less than 1%, is around 0.8%. So they have been very good at provisioning for losses. And then second, gross NPA is still high, probably 2-3%, but they are good at recovering. So net NPA and recovering or provisioning, both, it could be both. So net NPA is 0.8% versus, Kish and Moneyview. I could not find the number, but I'm assuming it will be much higher. And Zest Money anyways had shut down because of financial stress, right? Again, Fibe, Kish, Moneyview, all of them are using AI in some shape or form on their app. So that is no longer a differentiator. And if I look at write-offs, I think write-offs also have been downward for this player for Fibe. So overall, I think this business is doing well. And the only reason I could see why they have done more beyond the same user is because I think they got to know their TG very well through those micro loans. So now they know the behavior very well, and that's how they are able to keep the NPA, etc. very low, right? Because they have so much data on these people, right, on their database. Uh, and you could, I mean, all these lending companies, even if you go to traditional NBFC like Bajaj Finance, right? Bajaj Finance, I think, has the biggest data lake on consumer finance in India. In Mumbai, they have a whole building which is only data engineers and IITs and top brains of country working on consumer finance data analytics. So they probably have And they have data lakes on, let's say, doctors, CAs, right? So they go even to that level of depth. That which are the standalone doctors who are looking for unsecured debt. So they have even sliced and diced data to that level, right? So at some point, this unsecured consumer credit is a large data play, right? So with scale, you have that edge over new entrants and smaller players because you're mining the same TG for new products. So the same person, let's say, who is 30,000, takes a small loan, he pays it back. Now you can tap into him for mutual fund. Now you can tap into him for education loan. Now you can tap into him for other products. So with that, with vintage and with data, it becomes easy for you, and that's how your margins and NPAs stay low, and then your margins start showing up. So that's where I think Fibe is doing well. So it's again, this income group, 20 to 50,000, is still tech savvy. It's aspirational, right? Currently they are serving around 350 cities, which includes tier 3 and tier 4 cities, and roughly 25 million users. So imagine that 25 million borrowers who are not able to get bank credit are only dependent on you, right? And now you are doing way more than EMI based loans with them. So it's an interesting play. I think this company will, I'll follow them. Again, Kisht and Moneyview are totally different. Moneyview is for SME financing. And again, Kisht is now moving into secured lending. So totally different play. But Fibe it's rare, profitable fintech lender. And now it has diversified offerings for that TG. So it should be interesting. I think bigger players could learn from this how to do consumer lending, but I think the business model is solid as of now. I don't know if tomorrow NPAs blow up. That is the only risk which I see. Otherwise, their go-to-market, TG, from the demand side, the gap which they're trying to fill, all things are falling into place. If they can just manage this balance sheet risk, which is NPA and delinquency, then I think they should be fine. Which Zest Money was not able to do when they were trying to do BNPL, right? Because that's how I think they shut down, as far as I remember.
So next one is Game RAM. And before I get into the startup, I want to give a brief history. And I think the gamers will know it, and the non-gamers will find it very interesting. So when, as a gamer, you used to buy some games, right? Let's say in mid 2000s or early 2010s. For example, let's take FIFA right now. I used to play FIFA since 2007, 2008. And if you were buying a game that time, you used to buy a CD and it used to cost you 1,000 rupees or 1,200 rupees per CD, right? And when you bought any game at that time, you used to get the whole game. There was no add-on DLCs, which is like extension, or there was no in-game items that you could buy. Over the years, FIFA, even though you pay right now, in today's age, if you buy FIFA right off the shelf, it's almost 5,000, 6,000 rupees for that game itself. But within the game, there is a mode called, I think, FUT, Ultimate Team, where you have something where you can build your own team using players, and they have a system of card system there. Now, this is a very Japanese term called gacha. Gacha is where you spend real money to buy in-game items. Now, this became prominent with games such as World of Warcraft or League of Legends, where online multiplayer became very common among gamers, which you can say started with 2005-06, but also penetrated mobile gaming and other forms of gaming in mid 2010s. And after COVID, this has like shot off completely. So games like FIFA and all, you pay a certain fee, an upfront fee for buying the game. And for certain game modes within FIFA, you end up paying real-time money to buy game items. For example, cards of Ronaldo or Messi. If you're creating your own team, and it's unbelievable that people spend thousands of dollars. So if the game cost is $100, right? There are a good 5% of FIFA players who will spend more than the actual cost of the game in in-game money. And that's trickling down into mobile games also. I play a lot of mobile games. I used to play a lot of mobile games in COVID times. Games like Idle RPG. It's called Idle RPGs. Basically, games like AFK Arena, where you spend real-time money in the games to buy certain items which power up your character. Now the game will be free itself, right? The game you can download for free, you can play for free, but you will end up spending 10, 20, $30, right? And that psychological this thing is a huge game changer in the industry itself. So what Game Ramp is doing right now, it was founded by Vivek Ramachandran and Shashank Bandrangi. Its headquarters is in San Francisco, but the R&D team sits in Bangalore. Their core offering is that it's an AI native publishing stack for mobile apps where microtransactions happen, especially, right? They got a funding of $5.4 million in pre-seed led by Bitcraft Ventures. This is Bitcraft's first venture into an Indian-led investment, followed by Mixi by Japan, Dev VC, and other global VCs. Now, the target users for GameRamp, based on the investment, is that they're targeting indie to mid-tier studios looking to scale up without giving their IP rights. Now, what happens is that in the gaming industry, especially in mobile gaming industry, there are certain big game like Ubisoft. Then you have Rockstar Games, which makes I think GTA. There are plenty of Japanese companies. I keep forgetting the name. Japanese and Korean companies who are big in mobile gaming industry. If you look at Black Desert, I don't think a lot of viewers will know, but Black Desert rakes in 20, 30, $40 million a year just through in-game revenue by selling items like a special sword that you can kill your enemy with. So what happens is that these big companies, they have a lot of money to burn, right? But when a similar indie gamer or a small studio or an individual developer comes into the gaming industry, they don't have the money to like make this kind of system. So what GameRamp is doing is business model. It has two things on offer, two flagship products. One is Sentinel. Now, what does Sentinel do is it learns your in-game or your consumer apps working. Like it reinforces learning for real-time personalization of in-game or in-app economics and monetization. So let's say I built a game, right? And the game it's called, let's say, a card game, right? And the card game has that key. If you It's free, you can download it. But if you want to buy special cards in that game, you have to pay some money. Now, Sentinel will track that game's data, which cards are consumers buying, when to give a discount, which season is the highest sales. So it has a very AI-based reinforcement learning of the sales in the in-game app, and then it gives you optimal discounts, optimal price for that based on the data. Now, this is not possible by an indie gamer, right? He can just make a game or he or she can just make a game and put it out there. But big companies have a whole team to understand the economics, how much is being sold, which season is it being sold, is it Halloween, Diwali, Christmas. So Game App is providing this kind of AI tool which tracks your in-game economics and monetization. The second one is, I think, even more valuable, is called Grow, which is embedded financing with one-click access to global capital. Now, recently I made a friend called Anul Agarwal, who is an indie gamer. He has 14,000 followers on LinkedIn. And he made this very mid-famous game called Squishy Cats. Now, he says that issue with him is that he can make good games, right? But that what he makes, let's say, 5 to 6 games a year. He doesn't have enough funds to make the 5 to 6 games a year. Fortunately, he has a bit of funding from other sources, which he uses. But a lot of good gamers can't afford to do it themselves if they don't have good backing. So Grow basically allows them, based on this thing, looking at the project base, they give them a funding. Just like we have BNPL and other services for consumers, Grow is focusing basically on consumer apps and mobile apps, gaming apps, which are pre-seed, which are pre-revenue, my mistake, pre-revenue. And based on the concept and the development history of that developer, they give them a loan at a affordable rate. So that capital is there with the gamers nowadays, mid-tier studios and individual gamers, right? And the revenue stream for Game Ramp is that, so what happens now, most of the companies out there like Game Ramp, I'll give you some examples. Like a good example is Yodo One, or even Voodoo. Voodoo is a hyper casual publishing. So when you're publishing, Voodoo takes your IP handover, while Game Ramp is not taking your IP. It is giving you an API based service. So per API service click that goes from your game to that Sentinel, it charges a certain fee. So you own the game, you have the publishing rights to your own game. This is just providing a service for you to optimize your game monetization, but it charges API based revenue system. So if the game scales up, Game Ramp will actually end up earning good amount of money. If the game dies, the game dies. Right? This is a very different model from the other existing players like Voodoo and Yodo One. The second based revenue system is again via Grow, which is credit organization fees. If they give you a loan, they take a certain fee for that loan. And the value proposition that Game Ramp brings is that for them now increase small scale studios and individual gamers can increase the revenue by 40 to 60 to even 100% without expanding headcount or expenses, and building everything in-house without giving away the IP rights or publishing rights to any bigger company or bigger service provider. And it stands out for all these reasons, right? Like independence for developers, embedding finance and gaming. And it's, I think, one of the first companies to do this in the market right now. So it has a first mover advantage. And yeah, I mean, if you look at mobile gaming market globally, it's almost $100 billion, with majority of it being in Asia. Koreans, Japanese, Chinese. These three make the whole trifecta of the gaming industry. There's so many users out there, right? And India is a growing industry itself. The player base, you must have seen like famous games coming out in PUBG, right? PUBG, and then PUBG closed down, and then offshoot came up. They are making millions of dollars, right? So the industry, mobile gaming industry, is increasing in India, and I feel this kind of service that Game Ramp is offering is very unique, and it's very interesting because now individual developers who are very good in their own rights can launch games and scale it up. And Game Ramp can also provide and earn money through the API system that they're providing. And also, it's opening a new kind of economy, which India did not have, I would say earlier. Still, the Indian gaming system, if you look at the VFX, the best VFX out there, and the gaming industries, it's outsourced to India. It's a US company outsourcing it to Indian. But again, that's huge companies. These are offshoots of Rockstar or Ubisoft, big French and US companies that are coming here. Now there are individual Indian mid-sized companies who can take advantage of this and create good games. So I feel it's a very unique and interesting industry, and startups like Game Ramp are pushing it towards scaling it up, especially for Indian developers out here. So yeah, I think it should grow. I mean, what are your thoughts on gaming industry? Like we know that VFX India is a good hub for VFX. Like we make amazing VFX. If we remove Adi Purush,
Yeah,
that's
yeah,
something else. But
yeah. I
so,
mean, the more I meet the developers here, they still, I think, somehow aspire to earn in dollars or sell to US market or develop, give their skills to those developers because I think the gains are much better. With time, I'm hoping this will change. More talent will go towards developing indigenous games. So I'm waiting for that. But most of the people who are doing this are doing it for gaming studios. Either they are in Korea, they're working with someone in Korea, or because Korea is really big in this studio, gaming studio, etc. And or they are working with someone on West Coast or East Coast, mostly West Coast, right? US. So indigenous games, I'm still hopeful that this will change, right, in the coming years. The reason could be possibly because ARPU is much lower in Indian rupees. That's because the currency and other things. They still feel that volume is there, right? But that ARPU, etc. Again, this translate into even the biggest of players in India now. Nazara probably makes 60% of the revenue from outside India, more than 60 or 70%, I think. If I'm not wrong, should be more than 60. At least more than half of the revenue for Nazara Gaming is coming from outside India, including Canada, North America, Europe, right? Because they have acquired a lot of companies over last decade or so. So this is there that we have the volume of, in terms of players, but we still don't have that because we are not a wealthy country yet, right? So that will change, but nobody can question the talent which is available from game development or tech angle. So that is there. So I want this to be better than Korea in the coming probably decade. And the way Korea invested between, they started their liberalization journey same time when we started, 1991, 92. They are a developed nation, and because of our scale and breadth and population, we are still work in progress, right? And they actually did a targeted approach to invest in gaming and have that kind of talent. So I think we can also do that. So we should promote that. I have a lot of success stories where, founders, I will introduce you to founders. You will not think much of them, but one of them received a buyout offer from Nazara for 60 CR.
That's amazing.
Right? But if you meet him, you won't feel like he's a person. You won't notice him, right? But that's the beauty, right, of startups.
True.
But these things happen, and value can be created in any way, right? So hopefully this will happen where we have our indigenous domestic audience paying, for in-game purchases, for subscriptions, other things. And what we are supporting for global developers, global gaming studios, that part also should become bigger. Because ultimately, we don't want to be China, where we are building in isolation and you are completely disconnected from the global landscape. I don't think India will be a closed source system ever. Historically, it's in our DNA to explore things outside. Even for thousands of years, we have always we have been good traders, we have been good in exploring things beyond our borders. So, for that reason, I think India will never be that built in silos. We will always, so I would want both things to happen where we have indigenous market or domestic market for which we are building. At the same time, we are also integrated with the global gaming studios. So both things I think should happen.
Okay, I should go to the next one. So, like you were talking about indigenous gaming, so the super gaming follows that path. It is actually developing and publishing. They actually develop and publish mobile games and have a platform for scaling multiplayer games. The Pune-based studio that was behind the Indo-futuristic battle Indus is this, and they have recently closed 15 million Series B round, which was led by Skycatcher and New, which earlier invested in them as well, and Steadu Capital. So it that brought their valuation to 100 million, which is almost a five-fold jump from their previous funding that was in 2021, the Series A round, which was in 2021. So the purpose of this funding round was to bring Indus to international markets, especially in Latin America, for which they have done a strategic partnership with Loud, that is a sports player, and simultaneously they are scaling up their proprietary live ops tech, that is super platform, If I dig deep more into Indus, they launched this globally in late 2024. Uh, this is designed around what Super Gaming calls Indo-futurism, which is a Wakanda-like vision of futuristic India with rich Indus Valley mythology backdrop. What helped them in making was Unity, but it was heavily customized by Super Platform, and there is an in-house engine that manages everything from matchmaking to monetization. So when Indus was launched, actually it topped Google Play. Indus topped both Google Play and iOS despite being a new IP. So it exceeded 1 million downloads and had 14 million pre-registrations. Uh, Super Gaming also launched this Clutch India movement that was a year-long esports roadmap, starting with this India International Tournament, which started in late 2024, which ran till late 2024 and in early 2025. For which they featured top Indian and global teams, which were competing for 2.4 crore pool prize. For the crowded battle royale space, the other competitors are BGMI, Call of Duty Mobile, Free Fire, and even Underworld Gang Wars. These are for Indian studios. How Super Gaming stands out is that their IP, their original IP is Indian, and their identity is more on the aesthetic is more towards Indian heritage and mythology. And for their tech platform, they have infrastructure and SaaS capabilities to develop, which positions them as a studio for both creators and tech enablers. For the revenue, they are currently doing 43 crores, and with the almost 4 crores net profit for FY 2024. And this revenue stream is divided into two channels, two streams, that is game publishing, through which they published Indus, Muskan, Silly Royale, uh, and they collectively contribute to in-app purchases, battle passes. So this is more of an example of micro spending, which we were earlier talking about inside the games. And second is platform licensing. So they use their live ops engine built with Google Cloud, which supports matchmaking and analytics and even Web3 features. So they offer SaaS to other developers. So they already have Bandai Namco, which is a gamer, as already on board. If I look at the entire gaming market, it is around 15 billion, and it is projected to reach around 37, 38, 36 billion by 2030. What's interesting is that for the gamer demographic, it is 41% of these gamers are women, and 66% are outside metros. So that was one interesting fact about the demographics which I found. So yeah.
Yeah, I was checking the website actually. Interesting games. It's very similar to like tower battles are there, which is basically. Have you played the tower this thing royal game? I mean they are usually creating games which is multiplayer, right? It's a style of MOBA. Like MOBA is this MOBA MMORPGs, which is role playing games. So all the MMOs, massively multiplayer online games, right? I think that is what they're targeting, and this is where you have the gacha system of having in-game currency being used, being bought for this thing. So I can see why they are profitable and how they'll grow. I still feel that, I mean, this, as Kulmani was saying previously, that an Indian-based gaming system for Indian consumers. So they're doing that. But what most of the gamers do, I mean, the gaming studios in India do is They're Indian made, but for outside India. So we hope that the Indian consumers grows, the gaming consumer grows, so that they can grow. It depends heavily on how much the Indians are buying, basically. Like there are some people who buy a lot of in-game currencies and in-game stuff, but that's a very small percentage right now.
So yeah, I think this is the last one, right? So if I'm not wrong. So this is a startup called DPDZero, which is in debt collection, and it has raised, I think they've raised around $7 million. Um, Again, it's AI plus human hybrid kind of debt collection model. What they're saying is that will make it more humane. I don't know how you make debt collection more humane, right? You're asking someone for money, so obviously you can't be friendly, right? Uh, and it's interesting, right? They want to keep the NPS low. They have currently they are processing about, I think, 1.8 million borrowers per month, and they claim that they have collected debt from 10 million borrowers since its inception. Uh, so their clients are, I think, banks, NBFCs, MFIs like RBL Bank, IndusInd, L&T, Manappuram, Tata Capital, Moneyview. So Uh, total focus is on unsecured lending, right? Which we were discussing earlier with Fibe. So Fibe lends, and I think they are probably in the back end, they are collecting in case someone misses the EMI. So they do personal loan, unsecured loans, credit card debt collection. I, I don't know what it means, but they claim they have the ethics first approach to debt collection, right? So would like to learn more. It sounds a lot of like a loaded language, but I don't know what is ethics first approach to debt collection, right? So probably that's where I would like to learn more. And they claim that they want to disrupt the traditional high pressure collection model where you're constantly calling the borrower, you are reaching out to them and trying to collect. um, and so they have been able to build strong institutional partnerships with large banks. Other player, I would say, so there are several parts to debt collection, right? I don't know. Let me just break it down. So there is a part uh, which is legal, which is at the later stage. Once the debt is not collected, and then you get into the legal case. In case in unsecured, there is all that legal part. Before that, there is a phase where all these players have a role to play, right? Where you are just nudging people to pay and get back on track. But if it is, let's say, 60 days plus, 90 days plus, 100 days plus outstanding, then you get into that legal, right? So we have two different kind of players in India. One is people who are dealing with borrowers in the early phase, and then the second kind of players who are only taking care of the legal part, which is after 90, 100, 180 days, whatever that period is, right? So I think Credgenics, Resolve, these kind of players are in the legal heavy zone. Once you get into these court cases and notices and all legal notices, etc., etc. While I think DPDZero will be probably AI plus human agents on the ground, which is in the early phase. When you have just missed one payment, you still need to nudge that borrower. Okay, you are being watched, so please pay and get back on track. Please pay your EMI. So for the legal part, there are already established players. I think for the early phase, this AI plus human approach or the ethics first approach could work, right? But when you go 100, 200 days outstanding, I think that's when you get into the legal part. So this is interesting. What I'm also realizing that yesterday I was meeting a founder, not yesterday, day for yesterday. So this human touch part, right, that is still going to stay relevant. There's no replacement to that. And our discussion was mostly around, I was saying that AI agents are going to take over all the research bit, at least from the secondary research. Right? But the interesting agreement we had that the primary research, panel surveys, right, and the primary research, that is still going to be human dependent. Right? FGDs, human surveys, etc., etc. Right? Because that is not something AI could take. So even in this business model, this part where you have this early phase where there is no legal and automated thing, you need that hybrid approach. You need a human touch in case someone has just missed one EMI or one payment. At the same time, you still need to send constant reminders. So human touch will still remain relevant, right? So that's interesting, right? So a lot of things will happen in this space with these agents for collection also. So all value chain right from the disbursement, credit evaluation, underwriting, disbursement, collection, debt collection, legal cases, all this value chain of consumer credit, you will see AI layer now emerging through unique players. So in the coming quarters, I mean, even the legacy players will be adapting, and a lot of these players will be getting funded who are combining AI plus other things. Right? So they will receive this ticket size, which they are seeding or pre-seed round. So I think this is it for this episode. Please share your feedback. We will also include relevant links about companies which we touched upon, venture funds we touched upon, maybe some essays, etc., around these topics which are relevant. We'll include that in the description. So in case you want to read about those topics, you can actually deep dive into any of those topics. And we'll come back soon with another episode. I think in the coming weeks, we will also probably at the end of second month, we'll also do a quarterly roundup where we bring other VCs, investors for specific topics. We'll go into, let's say, industries, themes. So we'll do multiple episodes. What happened over last, let's say, 90 days, 180 days? What are the trends which are emerging? So this is it, and please support us. And looking forward to speaking to you soon. Thank you.